Lovely. Good morning, everyone. My name is Josie Fobo. I will be your presenter this morning, for the Leave Pay and Multiple Payruns session. Along in the session will be my panelists, which will be Gombi and Brian. And yes, so let's just discuss our agenda quickly for this morning's webinar. We will firstly have a look at the Leave Pay introduction, discuss that a little bit. Then we'll have a look at a few Leave Pay examples or a Leave Pay example. Then we'll have a look at how to set up the Leave Pay on the Sage 300 application, and then have a look at how you activate and deactivate Leave Pay. And then lastly, we'll jump into how to set up multiple payruns and how they can be of use to us, especially in the month of December. Just to note that this session will begin with a presentation, as you can see, and that the session will last for about 25 to 30 minutes and will include this current PowerPoint presentation and voice communication from the instructor, which is myself, and therefore please ensure that the sound on your computer is switched on. Please note that with regards to questions and answers, there will be a session after the presentation. So only questions related to the particular content that we're covering this morning will be addressed, and the questions and answers session will be roughly 30 minutes, depending on the number of queries, and the meeting will then end at 12 o'clock or maybe shortly after that, should we have more questions. Please also note that there is a chat box available to you. If at any stage you'd like to ask a question, you may also use that chat box as an alternative, and one of my panelists will then also address any queries you may have. So let's begin with the Leave Pay introduction. So what is Leave Pay? The Leave Pay function allows a user to pay an employee in advance for a period of annual leave. The Leave Pay is not used or activated for employees who are paid monthly. Therefore, this Leave Pay function cannot be activated for employees linked to company rules where the payment cycle is equal to monthly or is equal to custom. So the Leave Pay setup is only applicable for our weekly and bi-weekly company rules. So let's just have a look at what happens when Leave Pay is activated. So firstly, the future payslip values are calculated in advance and paid out in the current pay period that you activate the Leave Pay in. The correct tax calculation is also done and applied by the system. So that means that the tax is then spread over the Leave Pay periods, but deducted in your current period. What can also take place when you activate Leave Pay is that your leave transactions can be captured for the annual leave to be taken as well. But this is, however, optional on the system. You can also choose to activate your Leave Pay without processing an annual leave transaction for your employees. And what also takes place as well is that the freezing of employee payslip screens for the pay period spanning the duration of the annual leave will also then take place. So meaning if I activate Leave Pay for 3 weeks, for example, then the payslips for those 3-week periods will therefore be frozen as well. So let's just have a look and discuss the areas that will be affected on the system when activating Leave Pay or when setting up Leave Pay. So firstly, a few options need to be selected on your company rule. Then a few options need to then take place on employee level. So that would imply when activating Leave Pay for one particular employee. Then calculations can also be affected. Your leave in terms of leave transactions can be affected, your payment run, and your reports as well. So let's have a look at a Leave Pay example. So let's say we have a scenario where Leave Pay is activated for the employee for 3 weeks during week ending the 14th of December 2020, which would then be week 2 or 4 in December. and week 41 of 52 in the tax year. So if we have a look at this diagram, we are currently in the week ending the 14th of December, and then we have leave pay periods that we want to activate for. So for the next 3 weeks, which will be the last 2 weeks of December, including the first week of January, which would therefore, let's say, be a shutdown period in our example. So this diagram just goes to show you the dates, the period in the month, the period in the tax year, and what your payslip status would be upon leave pay. So if our current period is the 14th of December, then it would be our active period. And if we therefore activate leave pay for 3 weeks, our payslips for those particular pay periods would therefore be frozen as well. So let's have a look at the employee's payslip screen before leave pay is activated. So if from our example, that would be what the payslip looks like in the week ending the 14th of December. So we have our basic salary of 2,500, our travel allowance of 1,000. Then we have an overtime amount there, no annual bonus processed. And then we'll have our pay as you earn, our UIF. Then you'll see for this employee, you've also got pension and loan and a canteen deduction and our company contributions with SDL, UIF, and parking. So this is how the payslip would look like in our example as of the 14th of December, 2020. So when we have a look at what our payslip screen looks like after leave pay is activated, you'll see here that you'll have 2,500, which was your normal basic salary. And then you'll see that under the leave pay, you'll have your salary times by 3 months. So you are able to make selections of which lines must therefore be multiplied by your leave pay periods. You'll also see that the same therefore applies for your travel allowance in this example, your pension deduction as well. So that's basically the concept of activating leave pay. You'll see our parking as well has been multiplied by 3 weeks, which are our leave pay periods that we activate leave pay for. Now let's have a look at how we get to set that up on the system. So leave pay settings are defined per company rule and applies to all employees linked to that particular company rule. So on the company rule detail screen, you can select whether normal or late leave pay is to be used and to which payroll definition types that leave pay rules must apply. So we'll discuss the late leave pay in a little bit, but the normal leave pay will therefore relate to the example we just had a look at previously. So if we go to company management and company rule and we go to the leave pay option, you'll see that that is where you can select a default leave pay type. So you'll see there on our screen, we have normal leave pay, but alternatively, you can also have a late leave pay default type, which I've mentioned that we'll discuss in a little bit. And then you can also select what the leave pay must apply to. Should it be earnings, deductions, company contributions? You can either have earnings only or deductions only. So that's where you basically make the selection of which definitions should apply when activating leave pay. So you'll then select whether you want late or normal leave pay, which should be applicable to that company rule. So let's just discuss those two options. For normal leave pay, when normal leave pay is activated in the pay period before the employee's leave commences. So it means that when rolling over, all pay slips in the pay period immediately following the leave pay activation period will be frozen and not allow any input or calculate any values in those periods when your pay slips are frozen. So the pay slips will remain frozen for the number of periods selected when leave pay is activated. So if we have a look at the example that we had previously, it means that normal leave pay would be activated in the week ending the 14th of December, and the 3 leave pay periods following that period will have frozen pay slips as per the diagram that we had. Now, if the late leave pay option is selected, it means that the company where the, so leave pay is activated where the company capture the input 1 period in arrears. So the late leave pay will then also activate in the pay period before the employee's leave commences. So sometimes if you prefer to pay in arrears, this option is therefore selected on your company rule level. So the difference is that pay slips in the pay period immediately following the leave pay activation period will still be active, and the system allows input and calculates all values. So when rolling into the next period, all pay slips for that period will be frozen and remain frozen for the number of periods selected when leave pay was activated. So that's the difference between those two options. So let's have a look at company rule details and multiply payroll definitions. You may select which payroll definitions must be multiplied by the number of leave pay periods activated for the employees. The fixed and recurrence amounts will be multiplied by the number of leave pay periods when activating leave pay. So if you do not want to use the leave pay activation on, say, 300 people, you must then add leave pay specific calculations for those particular payroll definitions. So if you do not want to use the leave pay option that we have available, you can therefore use calculations and link those calculations to particular payroll definitions that you want to multiply those fixed or recurring amounts by. So just a quick note as well, the flags on the company rule will always override any leave pay specific calculations that are linked to a particular definition. So as we discussed earlier, when we had the screenshot, you'll select the payroll definitions to multiply by leave pay periods. So let's also have a look at some of the options we have available on company rule details under the Payrun definitions. There are options there, as you can see, with the blocks there, with the description as well. So we have an option to allow leave pay. So check the checkbox if leave pay values must be calculated when leave pay is activated. Then we also have an option there for separate pay slips on leave pay. So you check the checkbox if the leave pay must be displayed on a separate pay slip. And as discussed, we will then discuss the separate pay slips or multiple pay runs at a later stage in the session. Now let's have a look after setting up leave pay, where we go to then activate or deactivate leave pay. So on employee detail, individually, you can activate leave pay per employee. So leave pay can be activated individually for employees or by using the bulk employee update function. So when leave pay is activated, the system prompts you to enter the number of leave pay periods and whether a leave transaction must be created automatically. So if we have a look here on the employee details screen, you'll see that there's an option there on the top to activate leave pay. So you'll click on that leave pay button to activate leave pay. It will therefore bring up that box at the bottom where you need to enter the pay periods and the leave transactions information. Then once you've put in the relevant information, you will therefore get the last option at the bottom right-hand side to show that leave pay has been activated, and you can click on OK. You'll therefore see that on the employee's payslip detail screen in red will be a note there for you to show you that this employee does have leave pay activated for them, and it will also show you the number of periods that the leave pay is activated for. Then the alternative option that we discussed, where you can bulk activate leave pay. With the bulk leave pay activation, you will have the option to activate bulk leave pay transactions. So if you go under utilities and bulk employee updates, there will be an option to activate leave pay. So on that particular screen, you're also able to filter on employees that leave pay must be activated for. So you'll see you can either filter on a REM structure, you can filter on job titles and so forth. So it's almost quite similar to your employee screen, where you're able to then filter on certain employees that you may want. You'll see that once you've selected your employees, there's a similar or the same option will therefore populate as you do on employee level, where you need to enter the number of periods for the leave, and whether you want to also then run your leave transactions for the employees for that leave pay period or shutdown period. So then we've also have scenarios where employees return early from leave pay, meaning you have to then deactivate your leave pay. So to cancel leave pay on an individual employee, you click on that leave pay button that we had a look on the payslip detail screen. The leave pay can also be cancelled in bulk by using the bulk activation functionality that we just had a look at. Cancelling leave pay in the same pay period as it was activated. So if you deactivate it in the very same period that you activated it, then the leave transactions that were created will be deleted. And then we've also got cancelling leave pay in a pay period after it was activated. So if you cancel leave pay in a period after leave pay was activated and a leave pay transaction was created, you will have to manually delete the leave transactions, and you must create a new leave transaction with the correct leave dates, so as to ensure that the employee does not lose out, considering that they've cancelled their leave or came back early from the shutdown period. Leave pay can only be cancelled for employees which currently have leave pay activated for them. The normal pay slips will be active and the values will be calculated. The leave pay slip remains active, but no values will be calculated. So the amount column will be enabled and allows you to then capture any adjustments that may be necessary, because we also need to consider that when we activated leave pay, employees were then paid in advance for certain periods. Forced average tax will be cancelled, and the tax calculation option on the employee's tax definition will be used again. UIF will also then calculate normally, and the UIF earnings limit will be applied. So rules for cancelling late leave pay. Because the employees are paid in arrears, leave pay will not be deactivated in the period that the employee returns. The employees will be paid for the hours captured in the first period in which leave pay was activated. So the normal pay slips will be active and the values will be calculated. It is your responsibility to ensure that you reverse any amounts that should not be calculated for employees. The leave pay slip will remain active, but values will not be calculated. Only the amounts column will be available in which adjustments can then be made. Forced average tax will be cancelled, and the tax calculation option on the employee's tax definition will therefore be used, and UIF will then also calculate normally, and UIF earnings limits will therefore be applied as well. So if you have employees that return early from leave pay, or you would like to use custom calculations, it's advisable that you please book a consultant to assist with the following leave pay scenarios. So when leave pay needs to be cancelled, cancelling leave pay will affect tax and company contributions. So if it isn't done correctly, it could have a great impact on your payroll. So it's important to ensure that you see what the differences are and confirm whether any additional assistance would be required. If you do not prefer that the SAGE 300 people application automatically apply the leave pay calculations as per the setup that we discussed, then custom calculations for the leave pay amounts need to be created. So we do have a checklist available for leave pay on our knowledge base, and we've also then provided the link for you there as well. And you'll see that the checklist also then details how to go about setting up custom calculations should you not want to then use the leave pay activation on the Sage 300 application. Now let's just discuss the multiple payruns and how it's set up on the system. So let's firstly have a look at the definition. Sage 300 people allows you to add multiple payruns per pay period. Other people may refer to these as separate payslips as well. This means that you can add more than one payslip per employee per pay period. For example, in December, you can create a normal payslip run as well as a bonus run for your employees as well. Each payslip will have its own net pay amount and can be paid separately as well. When creating multiple payruns, you can specify the pay periods in which these payruns should be active. So if we have a look at the company rule and we go to payrun definitions, currently listed below on this screenshot is a main payrun. However, if you want to add a bonus run, for example, or a bonus separate payslip, there is an option there for you to add a new payrun. So you'll click on the payrun definition and then the new button and add a new payrun, say for your bonus or for your claims or whatever the case may be. Multiple payruns might be required at year end to do a bonus run that is separate from your normal payrun. Each additional run will also have its own payslip in that effect. So you'll see here on this screenshot as well that we have an additional bonus run, and it only has the annual leave, or the annual bonus earning definition linked to it there. So with each separate payslip or separate payrun, you're able to then add the payroll definitions that are applicable to that particular run. So as we've discussed, you'll add the bonus earning definition to the new payrun and fill in all other details that are required. Tax, UIF, and SDL definition lines will be linked by default to each new additional payrun that you define on the system. So after the payrun is added, you can then generate pay periods for the new payrun and then recalculate on company rule. So that generate payruns or pay periods is that icon there with those two screws there, so that it can generate your payrun, so you can have particular periods that you can use that payrun for. So let's have a look at remuneration definition. If your company rule uses remuneration structures, then the bonus payment run must be added onto the applicable remuneration definition as well. So you'll see that you'll have your pay run for your main run and your bonus run as well. And then you can add those pay runs onto your rem structure as well. Then you'll see on payslip definitions of employees, you'll now have a main run and a bonus run as well. And you can add the bonus run definition as well on the system here for each employee on the payslip definition. If no remuneration structures are used, then you must link the bonus run on payroll definition screen, which we have listed here. And then you can then just ensure that that setup is then done correctly. On employee detail, as we discussed, when you have a separate payslip, it will also result in a separate payslip then on employee level. So if you have a look here on this employee's payslip detail under summary, we are currently on the bonus payslip. If you click on the drop down and let's say you have a main and a bonus pay run, you can then alternate between the two payslips there on the payslip detail level. Ensure that the bonus pay run is selected before doing input on that particular separate payslip or pay run. So it's important to ensure that when processing, the correct payslip is then selected there upon processing. So just a few useful tips as well. If you do a bonus run and a normal pay run, do the bonus run input before the main pay run. Just mark the bonus run as processed once you're done with your processing This will ensure that no input on the main pay run will affect the tax on the bonus run. If both pay runs are open and input are done simultaneously, then the tax will recalculate across pay runs. So just to ensure that the tax calculated and other statutory deductions are done accordingly per each payslip. Once you're done processing one, just mark it as processed so that that information does not recalculate across any pay runs. So please note that we can now have or open up the platform for any questions and answers related to the leave pay, the setup, or how to go about the activation, and how to set up multiple pay runs as well on the system. Just before we move on to the questions and answers session, I just wanted to also discuss that whenever you feel like you may need training or have any questions or want any advice, we do have Sage University available to you to assist with any training that you might require. We also have the Sage Knowledge Base, which is the same link that we had on when we discussed the leave pay checklist and calculations. So on the knowledge base, we have a few articles there and templates as well. So that's quite a useful tool that we have available to you. And then we also have our Sage community on Sage City, where you can interact with others should you need advice on any topics that you may have at that moment. So thank you so much to everyone that joined the session. We really do appreciate your presence and hope that it was indeed beneficial to you. I will therefore open up the platform to anyone that may have questions, and either myself or one of our lovely panelists will therefore then assist in addressing any questions. Thank you once again for joining. Are there any questions at this stage? Any comments perhaps? Lovely. Thank you so much for your feedback. Lovely. Thank you so much. I hope this was indeed beneficial to you. And if there isn't anything else, please have yourself a lovely day further and a wonderful festive season as well. Thank you so much for the feedback. Appreciate it. Okay. I see Carly has a question here. Just one second. Okay, lovely. We can therefore share that PowerPoint presentation with you as well. That is not a problem. I'll just ensure that it gets to you as well. And the recording will also be available as well for this particular webinar. So I will ensure that you do indeed get that information. Perfect. All right. Thank you so much for attending. Bye, everyone.